Reuben here, and welcome to another episode of Business Uncut. Today we have one of our client managers at New Wave. His name's Callum Farrugia, and he deals with a lot of small and medium businesses in our firm and helps them to not only minimise their tax, look at strategies, but also a lot of business advisory. I wanted to get Callum in today to discuss something that we think is super important for all small businesses, and that's building better business habits. So Callum, welcome to the show.
Thank you for having me, Reuben.
Let's just start off a little bit, and we do this with any of our guests, is just a little understanding of what you do, a little bit about yourself, what you like to do in your spare time, and just give the audience a bit of a personality overview.
Yeah, too easy. So been with New Wave for, close to 5 years now. Started off when it was a pretty small team. I think it was just yourself and my old business partner. Interned for 6 months, and then once I finished uni, came on here full time and pretty much kicked it off. So started off with the tax and the kind of compliance based stuff, and now working more so with the advisory and the high-end strategy with my clients.
Awesome. And then how about personally, what do you like to do in spare time?
Bit of everything. Just obviously 25-year-old at the moment, so still just enjoy catching up with mates, spending time with my partner and so forth, but also don't mind going out to the golf course, having a bit of a hit. Do a bit of mountain bike riding in my spare time as well.
Awesome, and that's one thing I want to touch base on is Callum did mention he is 25, and a lot of people might say, well, geez, that's pretty young for a client manager. And yes, it is, but over the years, I truly believe in not believing in a hierarchy where you have to wait years to get where you want to be. Callum's shown that in the 5 years he's able to be there with the top accountants out there and really show what he can do. So he currently runs the biggest team and the biggest client set that we have at the moment. So definitely a lot of wisdom in those eyes, even though he's still truly a young guy. But let's get started. So building better business habits. So why is this so important, and why do you think that businesses today need to focus more on this rather than just running a business willy-nilly?
I think it's like anything really. I think good habits and good routines set you up for success down the line. What I generally tend to see is the clients that are in maybe not in the best situation financially, or are a little bit stressed out with, I guess, maybe who they owe money to, or they're just their financial situation in general. It's because they don't have those good habits and good routines in their kind of daily life that really then makes them feel like they're always catching up. And that's probably the most common feedback I get is a client will come in, a new client will come in, and they go, Callum, I'm just so stressed out. I owe money to the ATO, don't know where I stand with my customers, my suppliers, and I just don't have that clarity in my figures and how can I get there? And it's setting up those good routines, those good habits that will allow them to feel on top of all of their financial situation, and then provide them that comfort with their accounting.
Yeah, and it's just like anything in life, I guess. Like, it's the bad habits that get you into that rut. It's the bad habits that, let's say, if we bring this back on a fitness level, it's the bad habits that get you unfit, you're unable to run, but it's the good habits that allow you to grow and scale. It's very similar for a business, where if you focus on the good habits, have great repetition, and be disciplined in doing it over and over again, you'll find that your business will be financially fit. You will be financially fit, similar to your own fitness. So let's go through a few stories, as well. Everyone loves hearing a few stories about what you've seen in the past 5 years with clients, and how you've seen businesses with bad habits. I mean, what bad habits do they have? Let's start off with that.
One of the most common bad habits is leaving the hard stuff later. So let's put it in perspective with the tradie. On the tools all day, they like to get the job site early, 6 a.m. They're on the tools essentially, or getting there pretty early. They go, okay, yep, I'm going to do my hard day's work, and then I'm going to do my invoicing tonight. That's a perfect world situation, and as we all know, those perfect world situations don't generally occur. You go to the job site, 6 a.m., got maybe staff calling in sick, whatever it may be, causing that day to be stressful, and then the night comes, you go, instead of doing my invoicing tonight, I'm going to do it tomorrow night or the weekend, and it then creates that snowball effect of leaving all that hard stuff later as opposed to trying to tackle them earlier. And when I say hard stuff, generally for most business owners, it's to do with like looking at the books, doing their bookkeeping, maybe their invoicing, even providing their accounting information, all that kind of
the administration
stuff that a lot of people don't like to do. And I'll be the first to admit it as well when it comes to doing taxes and so forth. It can be definitely a little bit dry, but if you leave it last and it's inevitably never going to get done. Every now and then it might be that 1 out of 10 chance that you will get to it. You will have that perfect day, like I said before, but a lot of the time it doesn't, and then it creates that snowball effect. And then what we tend to see happen is the client will go, okay, well, I want to go for finance, or I want to go apply for that grant, or I want to do something. I need my taxes tomorrow, or sometimes yesterday. It's like, Callum, can you do my taxes? Well, we've been waiting on that bookkeeping information. We need to get all those outstanding BASs lodged, whatever it may be. It then creates that backlog, and it puts undue pressure on clients as well as us. So that's where I think having that good routine and doing that hard stuff early, I like to say, and like you were saying before, it kind of comes back to that kind of correlation with the fitness industry. If you do all the hard stuff earlier, then leave the easier stuff later, then it's a lot more easy to adhere to, and then you can stay on top of all those kind of little pain in the ass things.
Yeah, and you want to build it and make the habit, it's just continuous, and it basically just happens automatically. They're the best type of habits and when you do that, you'll find that if it is just doing the bookkeeping or checking your figures every week, and by reflex that every Friday at 1 o'clock you're going to be doing something. And that's what we want to build, and that's what we want to instill into businesses. Now, you mentioned about these tradies and so forth, and it's not only tradies; it's every business owner. Only a small percentage of business owners actually have the ability to go, okay, I'm stepping out of the business for now. I'm going to spend 1 hour before 4 o'clock and actually do the work. For businesses that aren't like that, what's the first thing that they need to focus on from an accounting point of view or a business point of view? What would you recommend?
I personally, what I do, anything to do with my personal life as well as work, is I do the hard stuff early. Look at the things that you find are difficult, whether it may be your bookkeeping, your invoicing, all those things I mentioned before. Do those first before you start your day. So let's go back to the example. If you're a tradie, before you go to the job site, get on the tools, do maybe half an hour of your books. It might not even be half an hour. If you're doing half an hour every day, it could be too much. Doing 15 minutes, 20 minutes on what you don't want to do, generally. Do that first, so then when you go to the job site, it's done, and you get home and it's done, and that way you're staying on top of your records and can get it done. That's definitely one of my.
But are there any recommendations you have to build it into their regime, into their weekly tasks? Is there what do you do, or what do clients do to say, well, every 9 o'clock I'm going to do this, and it fits in with my schedule?
I think just having a good day plan will help bring that in. I personally like pen and paper, so before I start my day, I write down all the things I need to get done. Prioritize the hard stuff first, then do the easy stuff last. Some people might prefer like a Google Calendar, whatever it may be, but something that will, prompt you to go out and do the hard stuff first is, my tip on kind of, keeping yourself accountable to do that.
And that's like for me, running New Wave alongside other businesses as well. We have 4 groups in New Wave group at the moment, and it's very difficult to, move time around. Time is a luxury that most business owners don't have. So for me, for example, I will book out my diary well in advance. Now, every single person listening to this podcast, and you're probably using your phone to do it, you have a phone, whether it's an iPhone or Samsung, you have one of these in your pocket with the ability to use the calendar. So go in there, share it with your team, share it with your business partners, whoever else is there, and block out time. That's the easiest way to do it, and that's how you build habits. Now, how you use your time is then up to you, and making sure that you actually focus on that task is a different story, but that's another way of doing it.
Yeah.
Tell us about some success stories where you've seen a business that's absolutely getting hammered and they're not going anywhere. Like, they're the ones we want to hear about. How did they change? How long did it take them, and so forth, and where are they now?
Okay, I've got a good client in mind for exactly that. He was a referral from another client of mine. He inherited the business from his father. His father was very old school, used to pay all of his bills with check, didn't know what cloud-based accounting was, probably never heard of Xero or QuickBooks before, did all of his taxes and BASs and so forth from bank statements. So very old school. He unfortunately became unwell and passed the business to his son. So his son came in and said, Callum, just inherited this business from my dad. What do? How do I stay compliant with the ATO? How do I stay compliant with ASIC and all the regulatory bodies? What do I need to do essentially? And I said, okay, yep, no problem. We can help you out. We can do your BASs, we can do your taxes, we can handle all of that kind of pain in the ass stuff. But first of all, can you tell me some figures about your business, what your revenue is, where you pay in expenses, how you keep track of your accounts receivable, accounts payable, and so forth? And he said, Callum, I have no idea. It's all on bank statements, so I couldn't tell you right now. that to me was a bit of a
eye-opener.
Eye-opener, 100% on where some people can really fall behind, because that has really thrown him in a bit of a tough situation. So this client, he pretty much had no idea where the business was from a financial perspective. That's a big indicator for us. Okay, we need to get our arse into gear and help this guy out, because you can go down a bad path if you don't know where your business is going, essentially. What we did was, first of all, put him onto Xero, then linked up all of his bank accounts. And this client, again, he was only using one bank account. So we then looked at, okay, how can we map his bank accounts better so we can actually flow the funds through, accumulate points with credit cards, put money away for tax, PAYG, super, and all that kind of stuff as we go along. Set him up with Xero, set him up with some bank accounts, and then showed him some kind of maps with due dates and so forth with the ATO. So when he has to pay his super, BASs and so forth, as well as getting him set up on an accounting package with us to make sure that he was getting those lodgements done on time and correctly as well. So from that, I think his business started off with a turnover of, it was in the $1 to $2 million mark a year. And now he's, the last year, he more than doubled that. He's in the $4 million territory, as well as the profitability going from, it was pretty much breaking even before. And again, this just solely would have been because he didn't know where the business really stood, because he didn't have that kind of clear financial records. Now he's making $500,000 to $1 million a year quite easily. So that's a good success story to kind of show, if you have your financial records up to date, what you can do with it.
So what were the actual habits that he had before that he had to actually change? So was it that he wasn't keeping his books up to date? Was it that he just needed a push to make sure that he was focusing on the business? Or
it was probably a bit of a different one, because he did obviously inherit the business, so it may not have been necessarily his bad habits. It was probably more or less
better habits.
Building better habits, 100%, as well as building that knowledge around the kind of accounting and compliance space as well. So we worked together and said, okay, well, this is the time you need to be looking at to do your books each week, and these are the things you need to do. And I think
good. Let's talk about that. So that's what I want to know, like what those new habits are now instilled with him. Because obviously, if he just kept running the business the way it was being run, which I assume was him out there doing the work with his on the tools, what did he have to remove? Where did he have to remove himself initially, and then what did he have to put himself into? So was it like, did he have weekly meetings? Did he have to set KPIs that he had to do and follow up on those KPIs? Was it a weekly ongoing, review of his figures that he does by himself?
I think the first thing that really got him out of the rut was finding an accountant to actually put him in the right path. Now, obviously don't want to toot our own horn, but we really said, okay, what you need to do here is get your records up to date and take a step back from actually being on the tools, so to speak, and actually managing the business. So looking at those kind of compliance requirements, and then asking questions where you're not familiar with. So things like whether to buy a car into the business, and or whether to, let's say, utilize Xero or another program. It was more or less kind of building that relationship with an accountant to kind of help him get there. In terms of his day-to-day, obviously I don't work closely enough with him to kind of see exactly what he did there, but the biggest changing point for him was, like I said before, getting off the tools, appointing someone to take over that kind of accounting role, which was us, as well as the bookkeeping role, to then make sure he is compliant, he is on the right software, getting everything done correct on the correct time. So going back to what I said before, doing the hard stuff early, whether it be your books and so forth. Your business, some businesses may just be too big for that stuff to actually be done in-house or to be done by the owner themselves, and that's completely fine. But they need to make that decision to appoint someone to take that over for them, and then, like you said, maybe build in weekly meetings with that person who does that role, or monthly meetings, whatever it may, take for the owner to be, overseeing it all, making sure it's running smoothly, but just making those actions to get that stuff done. Because like I said before, when it gets neglected because it's thrown in the too hard basket, that's where you get into strife when you do want to go for finance, or you do get those things approved or over the line, where you got 6 months worth of information you have to get done within a day, and it can be stressful.
Okay, yep. Well, good outcome for that client. Doubling their revenue in a short period of time is a huge achievement. Don't think you're the only person that's out there with these sort of issues. It's most likely 60% or more of businesses don't have great habits, and that's why they can't grow and scale. Growth and scale, again, starts from these habits. What I want to talk about are habits around bookkeeping. This is something where people, I feel as though, don't put enough time into, and it's so ad hoc. Well, they might do bookkeeping and look at their figures on a quarterly basis, if that. How often do you think people should be doing their bookkeeping? Why should they be doing it that often? And how often should they be understanding what their profitability and cash flow is?
I think at an absolute minimum, fortnightly. If it was me running my own business, it would be probably daily, just because obviously I'm in the industry, I like to see the numbers. I understand that's not everyone, but I think to make sure that you have a really good grip on your business, fortnightly would be a bare minimum. It's also more of a mental thing as well, because put in perspective, some people will do their books quarterly or 6 monthly, which if you can stick to it, fine. But if I was to ask you, Reuben, what was that transaction on your bank statement 6 months ago that was XYZ proprietary limited, you'd probably have no idea. If I asked you the day afterwards, you probably would, because you'd be, okay, well, yesterday I was at this place, I spent this amount, that's what it made before. So a lot of transactions on bank statements, like most business owners would know, 9 times out of 10, I won't actually say what the business is for.
Yep.
It will just have what the company name is. So then to try and go back and go, okay, well, it'll do my books and pretty much tell my accounting software where that transaction goes can be very, very difficult. And that just translates to a lot of the financial aspects as well, whether it's following up your debtors and those sorts of things. If you leave it very long, then it can be very hard to remember those little things as well. And just trying to adhere to it as well. If you're trying to do 6 months worth of bookkeeping, you're going to probably more than likely put it off because it's going to take you a whole day or maybe a whole weekend, as opposed to just 15 minutes or so each week.
Yeah, okay. So if you are doing it weekly, let's say you do it fortnightly, like the main purpose, guys, also over and above keeping your books up to date, is understanding which way your business is heading. You don't have to be an accountant. You don't have to be a CFO and an absolute financial whiz to understand whether your business is making money or not. I think that's what's important here. Is not enough business owners look at their figures, sit down on a fortnightly basis or on a weekly basis and say, this week or fortnight we made $10,000.
Yeah.
We lost $5,000, and then asking the question why. You only need to monitor 3 to 5 KPIs in your business. If you're monitoring your revenue, your gross profit margins, you're monitoring your profit margins, or even wages, let's say. 4 simple things that can tell you a whole story about your business very quickly. So that's why you build that habit in. Now, if it's not you that can do it, let's say you're just so busy, then build the habit within someone else in your team.
Definitely.
So that's something that we really want to push. So I guess that's the bookkeeping side and also the financial aspect. Now, how about just other business habits that you've seen? Are there anything that you think that other business owners need to know about over and above, let's say, tax and compliance?
I think one good rule of thumb would be ask more questions. So it's always harder for us as accountants to fix something retrospectively than prospectively. A really, really good example of that is, like, let's say, buying a car. I have a lot of clients that will just go out and they'll just buy cars. 9 times out of 10, they'll buy it in their own name because it's their own car, right? But if they do that, they can be potentially missing out on claiming the GST back, claiming it under the instant asset write-off, and a few other business concessions. So just making that quick phone call, that quick email to your accountant and say, hey, where should I buy this vehicle, or where should I purchase the house, or whatever it may be, to get that clarity and make sure you're making the right decision. Because, like I said, it's always easier to have that quick phone call, have that quick email, even though it might take a couple of minutes or whatever it may be, as opposed to then having to go back and fix it, and then it's usually cost money to do so.
Okay.
I have a bit of a story about that one. I had a client who works out in the mines. I think his income was in the 200 to 250K circa individually. His wife, her income is essentially nothing. I think she gets a little bit from settling, but she's a stay-at-home mother, so it's on the lower side. They bought a house together, an investment property. They purchased it in joint names. Again, I don't think he would have got any financial advice. He wasn't a client of ours at the time, but from what has essentially happened is the income that property's then generated has been split between the two of them. So he's got extra income on his relatively high salary already, being taxed at close to the 45% mark, and then his spouse has income which is getting taxed at essentially nothing because he's under the tax-free threshold. Now, if he asked that question, hey, Callum, where should I buy the house? And this is what I want to do with it. I want it to be an investment property. I want it to be positively geared, X, Y, Z. Where should I buy it? My recommendation probably would have been to buy it in his wife's name, because her income was under that 20K tax-free threshold, and all that income that would have been made from that property essentially could have been tax-free as opposed to half of it being taxed at 50%. So all it is quick phone call, quick email to get that right advice. It could be saving you thousands down the line. Now, I'm working with that client now to see whether it's actually worth moving it from the joint names to hers individually. To do so, he's going to have to pay 50% stamp duty on that transfer. So it could be in the tens of thousands of dollars to do so. So like I said, quick phone call, quick email, whatever it may be. Yes, it can every now and then cost a bit of money in terms of the advice around it, but more than likely you'll be saving thousands in tax or even just actual financial benefits.
Yeah, okay. So far we've gone through a few aspects here. So the first habit is obviously, if you don't have any habits, starting off with your accounting side, starting off with your financial side. The second habit is getting a good grasp on your figures on a minimum fortnightly basis, understanding your revenue, your profit and loss, your cash flow. Now, this habit here that you're talking about just now, it's more so around making sure that you're not scared of asking questions, because questions, it's one of those ones where you can build a habit of just being scared to ask questions. So I think in this sense, ask more, ask regularly.
100%.
Yeah.
For all the clients that don't work with us at the moment, if you're working with an accountant who charges you on the hourly rate for emails and phone calls, get a new accountant, because all that does is build bad habits. If you're working with an accountant that charges you that time, yes, they may be good, but if you're then afraid to ask those questions because you want to try and save the money, and you go, oh, well, I'll try and Google it myself, I'll try and ask a friend to save the money, and then you make the wrong decision, it's going to cost you, like I said, money down the line. So if you're working with someone like that, maybe even just ask the question and see if they have any kind of fixed fee proposals or something like that where they can just build that in with their kind of a package with them, so that way they aren't afraid to call, aren't afraid to email because they don't want to get slammed with, I guess, end of month statements and so forth from the accountant. Whatever it may be, as long as you can have that relationship with the accountant and they're acting more as a board of advice as opposed to just doing your tax and so forth, it'll definitely help you out down the line.
Okay, the last thing I wanted to chat about is building strong habits, or let's talk about bad habits you've seen around tax savings. So, do people save regularly? The ones that don't, what happens to them? The ones that do save regularly, does it put them in a better position? So tell us about that.
100%. I'd definitely recommend, and this kind of stems back to what we were talking about before with looking at your records on a regular basis. When you're looking at your records, you should really be trying to look at how much tax you should be putting away. And when I say tax, I'm talking about GST, PAYG for your staff, as well as super. It's obviously quite, let's put it this way, it's not exactly straightforward, but there are some kind of easy ways that you can do it. That's where you might want to speak to your accountant or Reuben or myself and say, hey, what's just a rough percentage? It doesn't have to be extremely accurate, but just some kind of percentage of your revenue to try and put away for tax each week. From what I've seen, clients that do that are much more financially stable, and they don't get any kind of nasty surprises when it comes to their taxes and so forth. So look, a good rule of thumb for anyone out there who just wants a quick tip, I'd say 30% of your revenue should be a decent amount to cover all of those, being your income tax, your GST, your PAYG. Super, probably not so much. So what I would recommend for super is just look at your payroll software for that period that you do your pays and whatever that super component is. So let's say you're paying $10,000 for the fortnight of wages, put $1,000 away for super.
Yeah, so something nice and easy. And if you are doing payroll, like Callum mentioned, these systems like Xero, they tell you how much tax to save. They tell you how much super to save for employees. So as soon as you see it, put it away. Have a different savings account. Have one where it's harder to even touch. Some bank accounts, it takes a few days to actually get it out of the account. But build that habit of putting it away straight after you have paid the wages.
Yeah. The best clients I work with, how they do it is when they do their pays each pay period, their QuickBooks or Xero will actually tell them the PAYG amount as well as super. So they have a specific account directly for those amounts. They put that away each pay period. Now that's not going to change at all, so you literally can't get it wrong, which is good. And then to tackle the income tax and the GST, 20% should be sufficient.
Yeah. And look, if there's more or less at the end of the year, then you've either saved more or you'll just have to top it up a little bit. It's not an exact science. If you need an exact science, and go see your accountant every quarter or every month to get that figure. But it's one of those ones that we're planning for the future, and we're trying to de-risk as well as motivate and really give clarity on what money is yours and what isn't. That's a big one. A lot of people will dip into their businesses thinking that there's $10,000 in there, but yet 7,000 of that was actually for PAYG, superannuation and tax, and they spend it. Next thing you know, at the end of the year, big bill comes up, and they don't know what to do, basically.
Yep.
So you've got to control your cash flow, and again, that starts off from good habits. These little things don't start immediately. Habits need to be done over and over.
Pretty sure they usually say 2 weeks, 14 days.
Something like that, yeah. But you just have to continuously do it. So it's a pain at the start, but it's so much gain down at the end of the road. So we might end it there, Cal, but thanks so much. Any final sort of tips that you want to give any business owners out there?
No final tips. I think the 3 that I mentioned today are my biggest recommendations. So do the hard stuff early, ask questions, work with an accountant that you can ask the questions with, and check your accounts on a regular basis.
Awesome. Perfect. Thanks, guys. Thanks so much for listening to our podcast. Every single podcast will have a different guest, and they're talking about different business situations, tips, and how you can really grow and scale your business. So nothing we do here is planned. We just have a chat about business life, and it's uncut because that's what business is. So please subscribe, share it with your friends, and we'll catch you next time. Thanks, guys.
Thanks,